What if I told you that the difference between traders who blow their accounts and those who build empires isn't strategy, isn't indicators, and isn't luck? It's psychology. Yes, your mind can be your greatest weapon or your deadliest enemy. Today, I'll reveal the 5 golden rules of trading psychology that every successful trader follows. And if you stay till the end, you'll never look at the markets the same way again. The market doesn't destroy traders. Their emotions do. Fear and greed are the hidden puppeteers pulling your strings. If you can't master them, you will forever be a slave to them. When people enter trading, they believe the battlefield is outside, on charts, candlesticks, news, and price action. But the real war is internal. Every trade tests your psychology more than your technical skills. Fear makes you close winning trades too early. Greed makes you hold losing trades too long. Ego makes you fight the market when you should surrender. This is why 2 traders can use the exact same strategy, yet one succeeds and the other fails. The difference? Emotional discipline. Think of emotions as waves in the ocean. The market is already unpredictable, but when your emotions add turbulence, you get lost. A trader without emotional control is like a sailor in a storm with no compass. Fear is the most common emotion in trading. It shows up in many disguises. Fear of missing out, FOMO, jumping into trades too late. Fear of losing, cutting trades too early. Fear of being wrong, refusing to take necessary risks. Here's the irony. Fear is always about the future, not the present. You're not afraid of the red candle on your screen. You're afraid of what might happen next. But markets reward those who can sit with uncertainty. Fear-driven traders exit too soon, missing out on potential profits. They see the market as a predator instead of an opportunity. Solution: accept that losses are normal, even necessary. Every loss is tuition you pay to the market. Without it, there is no learning. Once you internalize this, fear loses its power. If fear makes you exit too soon, greed makes you hold on for too long. Greed whispers, what if it goes higher? Don't exit now. Wait for more profit. This trade is different. Ride it until the moon. But greed blinds you to reality. It convinces you that this one trade will change everything. That one moment of overconfidence is where traders wipe out weeks or months of consistent profits. Greed isn't about money. It's about ego. You want to prove that you're right, that you're smarter than the market. But the market has no memory, no loyalty, and no mercy. Solution: before entering any trade, set your profit target and stop loss. And once they're set, respect them. The moment you change them mid-trade, you are no longer following logic. You are following greed. Fear and greed are easy to spot, but ego is more subtle. Ego says, the market is wrong, not me. I'll add more to this losing trade because I can't be wrong. I know better than the market. This mindset destroys traders faster than bad strategies. Ego refuses to admit mistakes, and in trading, mistakes compound. Think of ego like a fog. It blinds you from seeing the reality of the chart. A humble trader survives. An arrogant trader blows up. Solution: adopt the mindset of scientists. Each trade is an experiment, not a test of your intelligence. If it fails, gather the data, learn, and move on. The best traders are emotionally detached. This doesn't mean they don't feel emotions. It means they don't let emotions control their decisions. Imagine a surgeon. If fear or excitement control them, every operation would be chaos. Instead, they remain calm under pressure, following procedure. Trading demands the same. Detachment means you don't celebrate wins too loudly. You don't mourn losses too deeply. You see both as feedback, not as personal victories or failures. This balance creates emotional resilience, the ability to trade consistently regardless of outcomes. Here are actionable rules to build emotional discipline. Set hard rules. Predefine your entry, stop loss, and take profit. Then execute them without debate. Use smaller positions. If fear overwhelms you, it means your position size is too big. Reduce it until you can think clearly. Keep a trading journal. After every trade, write down why you entered, how you felt, and what happened. Patterns of fear and greed will reveal themselves. Create rituals. Just like athletes have pre-game routines, create one for trading. It calms your mind and prepares you for discipline. Walk away. If emotions spike, walk away from the screen. Sometimes the best trade is no trade. Here's a hidden truth. Your emotions in trading are a reflection of who you are outside trading. If you are impatient in life, you will be impatient in trading. If you crave constant validation, you will chase FOMO trades. If you hate being wrong, you will refuse to cut losses. Trading doesn't just reveal your psychology, it magnifies it. That's why emotional mastery in trading isn't just about profits. It's about personal transformation. When you learn to sit calmly through market chaos, you also learn to handle life's chaos. When you accept losses with grace, you also learn resilience in setbacks. Think of emotions like wild horses. If you let them run free, they'll throw you off. But if you learn to harness them, they can carry you further than you imagined. Fear is energy. It can make you more cautious and calculated. Greed is ambition. It can push you to aim higher. Ego is confidence. It can give you courage to take trades. But only when these are controlled do they serve you. Otherwise, they enslave you. The ultimate mindset is this. Trading is not about money. It's about decisions. Money is just a score. Master your decisions, and the money follows. The charts you study, the strategies you copy, the indicators you follow, none of them matter if your emotions run the show. The market isn't your enemy. Your emotions are. And once you master them, you won't just trade better. You'll live better. Control your emotions before they control you. Because in trading, self-mastery is the greatest profit you'll ever earn. Every failed trader has one thing in common. They abandoned their plan the moment emotions whispered in their ear. The truth is simple. The market doesn't punish you for being wrong. It punishes you for being inconsistent. Imagine walking into a battlefield without a strategy, just running with a gun and hoping you survive. That's how most traders approach the market. They enter based on instinct, rumors, or signals without structure. A trading plan is not just a piece of paper. It's your compass in chaos. It defines when you enter, when you exit, how much you risk, what setups you take. Without it, you're gambling, not trading. And the market has an efficient way of punishing gamblers. Most traders start with good intentions. They create plans, write rules, and even rehearse discipline. But when the market opens, everything changes. Why? FOMO, fear of missing out. You see a candle shoot up and think, I can't miss this. So you jump in, breaking your rules. Overconfidence. After a few wins, you believe you can feel the market, so you ignore your system. Desperation. After losses, you throw the plan away, trying to make it back quickly. The irony? The plan is there to protect you from exactly these emotions. But emotions are strong, and unless you anchor yourself, they'll drag you away. One of the biggest lies traders tell themselves is, I'll just break my rule this one time. You hold a losing trade longer than your stop loss, telling yourself it will recover. You double your position, even though your risk rules say otherwise. You trade a setup your plan doesn't allow, convincing yourself it looks too good to miss. And what happens? Sometimes it works. That's the danger. Because if breaking your plan is occasionally rewarded, your brain learns the wrong lesson. You start believing discipline is optional, but the market always collects its debt, sooner or later. Both professionals and amateurs lose trades. The difference is how they handle them. Amateurs lose because they break their plans. Professionals lose within their plans. A professional trader sees losses as part of the system. They understand that no strategy is perfect, but consistency ensures long-term profitability. An amateur, on the other hand, sees losses as personal failures. So they panic, improvise, and change the plan midway. This inconsistency is why they stay stuck. Your trading plan is more than just rules. It's your psychological anchor. When emotions rise, your plan brings you back to reality. Think of it like a pilot's checklist. Pilots don't fly planes based on gut feeling. They follow strict procedures because lives are at stake. As a trader, your financial future is at stake. Why would you trust emotions over structure? The plan saves you from over-trading, chasing setups, revenge trading, ignoring risk. Every rule you follow is one less decision your emotions can corrupt. A trading plan should answer these 5 questions clearly. What markets will I trade? Forex, stocks, crypto, indices. What setups do I look for? Breakouts, pullbacks, trends, ranges. What is my risk per trade? Fixed percent, fixed amount. What conditions must be present to enter? Indicators, time frames, confirmations. When do I exit? Take profit, stop loss, trailing stop. If your plan doesn't cover these, you're leaving gaps for emotions to sneak in. There will be days when your plan tells you to sit out. No setups, no trades, silence. These are the hardest days because your brain craves action. You open the charts, see a random pattern, and think, maybe just this one. But trading is not about constant action. It's about selective action. Like a sniper, you wait for your moment. Impulsive traders shoot at everything, wasting ammunition. Disciplined traders wait for the high probability shot. One of the best ways to stick to your plan is to track yourself. Keep a trading journal. Write down each trade, why you entered, whether it followed the plan, how you felt before, during, and after. Over time, you'll notice patterns. Maybe 80% of your losses came from trades that weren't in your plan. Maybe your biggest wins always align with strict rules. Seeing this on paper will rewire your brain to trust a plan. Here's the truth. Discipline is hard in the moment, but it protects your future. Breaking rules feels good in the moment, but it destroys your future. Ask yourself, would you rather feel the pain of discipline now or the pain of regret later? Every successful trader chooses discipline because regret is far heavier to carry. Here's the deeper truth. Your ability to stick to a plan in trading reflects your discipline in life. If you break promises to yourself outside trading, you'll break them inside trading. If you lack patience in daily life, you'll lack patience in trades. If you're impulsive in decisions, you'll be impulsive with money. Trading doesn't just require a plan. It trains you to live with one. And that discipline spills into every area of your life. Some traders argue, but you have to be flexible. You can't always follow a plan. And yes, flexibility matters, but only between trades, not during them. Between trades, you adjust your plan based on new data, backtests, or market conditions. During trades, you execute with zero hesitation. Flexibility is preparation. Discipline is execution. Without this balance, you'll always be lost. At the end of the day, your trading plan is more than rules. It's your shield, your anchor, your lifeline. Break it once, and you invite chaos. Respect it, and you build consistency. The market doesn't reward geniuses. It rewards discipline. Stick to your trading plan, and one day, the plan will stick to you, bringing profits, peace, and mastery. The biggest lie in trading is that the edge lies in indicators, secret strategies, or insider information. The truth? Your real edge isn't on the chart. It's in your mind. Master yourself, and you master the market. Every trader begins by hunting for the perfect system. They try dozens of strategies, indicators, signals, even copy trading. Yet, no matter how advanced the tools, most end up losing. Why? Because trading is not a test of knowledge. It's a test of character. If you're impatient, the market magnifies it. If you're greedy, the market magnifies it. If you're fearful, the market magnifies it. The market is a mirror reflecting your inner world. What you see on the chart is not the problem. It's how you respond to it. This is why two traders can use the exact same system, yet get opposite results. One is calm, patient, disciplined. The other is impulsive, emotional, restless. The edge lies not in the system, but in the self. You can buy books, courses, or mentorships, but none of them can replace emotional control. Without self-mastery, a great strategy becomes a weapon of self-destruction. A profitable system becomes a cycle of losses. A good market opportunity becomes a trap. With self-mastery, even an average system becomes profitable. Small opportunities turn into consistent gains. Every trade, win or lose, becomes a step forward. In trading, you don't need a massive market. You need to master yourself. Because markets will always be unpredictable, but your psychology doesn't have to be. Self-mastery in trading is about overcoming three main enemies. Impatience, jumping into trades too early, exiting too late. Insecurity, doubting your plan, chasing signals, copying others. Overconfidence, believing you're smarter than the market. Each of these destroys traders, not because of the market, but because of themselves. Until you conquer these, no amount of technical analysis will save you. The best traders are not excited by wins or destroyed by losses. They remain steady, neutral. A win is feedback. The plan worked. A loss is feedback. The plan didn't work this time. Neither changes their mindset because they know the law of large numbers. Consistency beats emotions. Think of a casino. Casinos don't cry when someone wins a jackpot. They don't cheer either. They simply keep playing probabilities, knowing the edge is in the long term. That's what traders must become. Calm, consistent, neutral. You cannot master what you don't understand. The first step of self-mastery is awareness. Ask yourself, what patterns do I repeat when I lose? Do I revenge trade after a loss? Do I overtrade when I'm bored? Do I break rules after a winning streak? Your journal becomes your mirror. Over time, you'll see that your biggest losses weren't caused by the market. They were caused by recurring psychological patterns. Awareness turns chaos into clarity. Here are powerful shifts every trader must internalize. From perfection to probability, no trade is certain. Accept uncertainty. From outcome to process, focus on following your plan, not on the result of one trade. From control to adaptation. You can't control the market. You can only control yourself. From ego to humility. The market doesn't care about your opinion. Respect it. Each mindset shift weakens the grip of emotions and strengthens your control. Self-mastery isn't philosophy. It's action. It shows up in small decisions. Sticking to your stop loss, even when it hurts. Skipping trades when setups aren't clear. Walking away from screens when emotions rise. Accepting a loss without revenge trading. Discipline is not dramatic. It's silent. It's not a single grand act, but thousands of small, consistent acts. That's where mastery is born. Just as athletes and monks use rituals to train the mind, traders must too. Morning routine. Don't rush into trading. Center yourself with meditation, journaling, or breathing. Pre-trade checklist. Confirm your plan before every trade. This kills impulsive decisions. Post-trade reflection. After each session, review your emotions and decisions. Weekly reset. Analyze your mistakes. Then forgive yourself. Start fresh. Over time, these rituals build mental strength. Trading becomes less emotional, more systematic. Ancient Stoic philosophy offers powerful lessons for traders. Control what you can, accept what you cannot. You can't control the market, but you can control your actions. Detach from outcomes. A trade's result doesn't define you. What matters is whether you followed your plan. See obstacles as lessons. Losses aren't failures. They're teachings from the market. The Stoic trader is unshaken by storms. Because storms are expected. They don't wish for calm seas. They learn to sail through waves. Here's the secret no one tells you. Trading is not just about money. It's about self-evolution. When you master patience in trading, you become patient in life. When you accept losses calmly, you handle life's setbacks with grace. When you build discipline in markets, you strengthen discipline everywhere. Trading becomes a spiritual practice, a mirror showing you who you are and who you could become. The money is secondary. The transformation is priceless. Most traders are fragile because their confidence depends on their last trade. Win, and they feel unstoppable. Lose, and they collapse. Self-mastery changes that. When your identity isn't tied to outcomes, you build inner confidence. You no longer need the market to validate you. Your confidence comes from discipline, process, and resilience. This makes you unshakable. Whether you win or lose, your foundation remains solid. Every trader dreams of an edge. But the ultimate edge isn't found on TradingView or in a secret course. It's found in the mirror. When you master your fear, greed, and ego, you no longer trade against the market. You trade with clarity, with strength, with freedom. Remember, Your greatest investment isn't the charts. It's in yourself. Master yourself, and you've already mastered the market.